Welcome everyone, Simon here from the Whales of Wall Street. We have a quick update video for you guys today around central bank digital currencies and stable coins as well, just off the back of the recent Digital Pound Foundation event that I attended during this week in London, Cannon Street to be specific. It was very interesting, topical discussions and panelists, as it always is. Some usual feisty questions amongst some really good questions around development, where we are with things. Why do we need these areas of financial evolution? Now, those that don't know much about central bank digital currencies or stable coins or just the general evolution of financial system in general, definitely recommend watching my video around the RTGS systems. This is the remittance system that pretty much powers the entire financial world, with collaborations of like Chaps and Swift, all these kind of buzzwords that you've probably heard much about in the past or more recently, but maybe don't have the information perhaps to understand exactly what these areas do towards our financial kind of trading, the way finance is passed back and forth between countries and companies, etc. So definitely check that out. Hopefully it helps broaden the horizon of education around that area. But yes, in general, central bank digital currencies have been something that have been in the pipeline for a long time. Some countries have already developed and progressed them to the point of going live, which we'll touch on in a second. And some, there's actually over 130 countries right now that are either in pilot stages or development stages of a central bank digital currency. It's essentially the digital format of their existing fiat system. But, why is this needed? What do we want to do with this? And, there's pros and cons. There's theories. I won't say the word conspiracy theories because some of them essentially are definitely applicable. And in certainly the transition of being implemented as well. So there's loads of different areas, and I'm going to touch on a bit as well about inflation and interest rates, because one of the really interesting topics for central bank currencies was to try and not necessarily eliminate these particular elements of the crazy fluctuations that we get over long periods of time and short periods of time, obviously affecting us worldwide right now, across the board really, with financial agreements that we have or mortgage rates, all of these things. Can it really reduce this significantly or potentially even eliminate it? So we'll go on to that in a bit as well, because I've got a few things that I've been researching on and putting down as topic points. And also, really quickly, these books, I have one to give away. I'll give a bit more detail at the end of this video. This was actually from David Birch, is the author. Really insightful guy, very thought-provoking in some areas for sure around digital currencies, crypto, and it's an absolutely amazing book actually. If you're new to crypto or you still know quite a bit about crypto, there's a whole introductory aspect of like what is digital currency and what's coming forwards, and I've got through to around page 30, 40 or so, which is about, I don't know, not even quarter of the way through, I don't think, but absolutely fantastic read so far. So I did grab a few copies at the event. He was one of the keynote speakers at the Digital Pound Foundation event the other day. So keep you in the loop of how to grab or potentially grab one of these copies. It's an absolute delight. So guys, let's go into this topic now. So first and foremost, just to make it a bit easier, I'm just going to share my screen. Obviously, if you haven't done so already, do make sure that you smash that subscribe button. Welcome to the channel if you're new, and welcome back if you've been with us for some time. Of course, loads of different topics and discussions, as you can see, in just this short span of time, the different projects that we cover. And we've also got loads of interviews lined up. There's loads more coming. Got one with XTC CEO Sunil, which is awesome. Looking forward to that. We've got the Energy Web team coming on as well. 2-part series, splitting EWX and EWT platforms, foundations, technologies, collective as well. And there's 3 or 4 more lined up. And hopefully as well, a very powerful figure in parliamentary aspects as well here in the UK coming on board to talk about trade finance in more detail as well. So let's go into this one, guys. So Digital Pound Foundation, for those that don't know, is very Very much an informative platform, but also a membership and policy lead, if you like, for better terminologies, of trying to create the reasoning behind the digital pound. Why do we need it? What's the point in it? And encouraging education and a platform for people to question things and push things forward. Now, we'll talk about a few other bits and elements of that, but you see just here in this little carousel some familiar names in the sphere of crypto and Web3. Of course, Electronium here, Fireblocks, absolutely phenomenal. You've got the likes of Ripple and Quant, which we obviously cover on the channel quite a lot. I mean, there's so many, guys. These are just some of them. Accenture, obviously, absolutely huge. Avalanche, you'll recognize as well. If you want the whole list, it is on the website somewhere, but it's absolutely phenomenal. We've seen a multitude of speakers, likes of Circle, Hedera, etc., on board recently with conversations and topics at these events. And in some cases, not always members or partners, but still come and tend to provide information and knowledge to the board and the audience, of which I was part of in the events that have been in the past and the future as well. So it's really interesting. We did a really cool interview with Jana, who's the policy lead at Digital Pound Foundation a while back now, last year. Do check that out. I'll leave a link at the end of this one to get a bit more of an insight of what Digital Pound Foundation do specifically and the orientation around central bank digital currencies, particularly the digital pound in this instance, and stablecoin application as well. So, without further ado, for those that don't know, what on earth is a central bank digital currency? You may see the abbreviation, at least more so than ever before, to be honest. CBDC is what you're kind of looking out for. So the digital form of a country's fiat currency. This is pretty much what we just said a minute ago. So in that sense, you're talking about pounds, you're talking about dollars, euros, yen, you name it. And there's always that inquisitive thing as to why do we actually need this? So it's obviously a digital representation of the physical currency that we have, whether that's in a cash format or essentially you could argue we are using digital money already, but the fact of the actual application of it is we're essentially still ultimately using that physical principle of it. And ultimately, CBDCs will continue to have that legal tender aspect, which we have currently with our existing systems and all these areas as well. So as I mentioned earlier, I can't remember the exact number, but I know it's definitively over 130 countries that are globally actively piloting or researching or even indeed developing a central bank currency. And I mentioned just a minute ago as well about some that may already also venturing ahead in relation to already having one live. China is a great example. I think it's about 2 or 3 years ago now. Can't remember the exact date of when the Winter Olympics were. But it was the first case study, the first actual introduction of the utilization of the digital yuan in a CBDC format. It's a very successful pilot in terms of its usage, its utility, the ease of transactions, the reporting, the processing. Now, bear in mind, guys, probably 99% of this world's population won't know the back end of all this financial change. They will just be using it at the end of it. So in terms of interfaces, wallets, etc., remind myself to talk about that in a bit more detail because it was a big topic in the recent event that I was at. But looping back round is that point that, whatever system we are using obviously has to be user-friendly, the interface has to be friendly, or indeed, hopefully, to the point where we don't even really know or need to use anything. This will be in the sense of retinary display, biometric payments, chips. We're talking about crazy things here. Some things we don't want, but some things that not necessarily may be imposed upon us, but as the generations evolve and see the utility or the ease or the simplicity, irrespective of what you think about in your minds, whether you believe or disagree or agree with it, ultimately they get their own way to an extent at some point, irrespective of when we say no. It's just a generative or a generation thing, an evolution thing. I think you have to have an open mind with it. I'm not suggesting for 1 second that I want anything like this at all. I'm in the camp of not really wanting to go down that route at all, but I totally understand that the way that they want society to go, whether that's a World Economic Forum platform, build, agenda program, whatever you want to call it, you have to have the open mindedness to understand what's coming. And as an investor, which is how I always flip this around, is that, okay, whether you do or don't want to go down this route, you could still try and make money out of this, whether it's the companies that are making them, producing them, whether it's the chipsets, whatever it might be, just keeping the open mind as to what's out there, what's coming, and how can we take advantage of it. You won't see the super rich doing this, that's for sure, because they're just making money and avoiding the system. So the poster behind me, to become the 1%, you have to do what the 99% don't, and it's just that way. But we elaborate onto another conversation here. So back to CBDCs and the concepts behind these. I'll just pull my browser back up before I forget. Otherwise, you're just looking at my face all the time. So yes, the goals of CBDCs here. Now, this is a bit of a fluctuation around US utility. But in general, you can kind of understand that, several blockchain technologies right now are either being considered or being utilized right now for processing or providing the platform for digital currencies or CBDCs to be used in these various countries and various banks. There's loads of things to think about here. With the capabilities of smart contract aspects, we've got the interoperability perspective. You can imagine every bank with its own different infrastructure, its own different frameworks, its APIs, the ability to confirm and validate and process things. This is obviously where blockchain has a significant part to play, as well as AI in terms of regulating or the analytical perspective or trend lines, forecasting, etc., to work with this. And then, of course, you bring in, I always talk about the merging technologies, guys, blockchain, AI, IoT, cloud, 5G/6G, purely because you need all of these elements to work together. Communication factors, obviously using your smartphones or eventually displays in your mind, or whatever, will still have to be connected to something for payments to be able to be made, right? So obviously from the interoperability perspective, this is absolutely crucial in terms of the seamless interaction and the transactions aspects of digital currencies. And of course, like the protocols that these blockchains build. So you can think of the likes of Ethereum, obviously heavily used in this. You've got the likes of Hyperledger Fabric. So Hyperledger Fabric, for those that know, is very interesting. It's a Linux production. Those that don't know, is it's kind of like the equivalent of Microsoft, if you like, Windows, and of course, Macs, etc. Linux is very heavily coded related, but they created the Ledger Fabric, Hyperledger Fabric, which kind of peels its way out of different sections. I'm trying to get someone from their team to come on board, but go on the Hyperledger website and you'll see what I mean. It's absolutely phenomenal. And I think in ultimate situations, a lot of the enterprise and certainly from the institutional levels will be utilizing these areas a lot more, perhaps, than the sort of traditional crypto or blockchain companies that we're familiar with in terms of investment. It doesn't mean they won't be used at all, because they will be from a layer perspective, layer 1s, 2s, 0s, 3s, for sure. But the foundational aspects, you can argue, obviously Ethereum, Hyperledger are going to be very key to this. We talk about Stellar quite a lot on the channel. Many know the Binance chains, Algorand. We could go here for a list forever. Corda R3, heavily involved, of course, with XDC. There's just, it's almost endless. So we look at that aspect. We've got cross-border compatibility that I said as well. So international payments, the settlements aspects. Everyone's on different networks, different frameworks. You've got to really identify like these kind of areas being concluded and how they work together. So interoperability is obviously very important to that. And I mentioned just a minute ago, digital wallets. Now, one key aspect that came out of the event in the other day was this user interface aspect, and they felt that in the coming years the ultimate winner here, not just from the dApps perspective or digitalized or decentralized apps, is the wallets that we use as well. So could this be integrated with existing banking systems that we have? There's a lot of independent banks outside of those kind of mainstream ones that we know, Barclays, HSBC, etc., that a lot of people are moving their money towards, whether that's a trust or a confidence scenario that's made them do that, or purely from the products and services. And someone kind of asked the question to the panel, I think it's the Ripple representatives there and everyone on the panel. I'll leave a list at the end. But he kind of retaliated to say these banks aren't, the traditional ones aren't going anywhere. The new ones will, of course, evolve and increase over time. But the ultimate thing is that everyone's different. Everyone requires different products and services. So people were saying like, well, why, if we're doing this new evolution, would the old ones exist? Or, they need to adapt to try and stay in the remit of, being, familiar with everyone, the awareness, etc. Trying to think of the word in my head, relevant, to continue to be relevant. And of course, again, back to the point about generation, population wise, this always changes over time. It's constantly evolving. So there is an argument to say there's going to be a multitude of these, and you will see, and I've said this in a video in my predictions for 2024, I think that this year and beyond is going to be a significant stepping stone for banks to start introducing cryptocurrency, whether it's custody or custodian aspects, whether it's a wallet, or the ability to transact with crypto or store crypto, all of these kind of things. There's no doubt in my mind that they have to adapt in some way. That's why we're seeing significant regulation and legislation flying through the doors right now. The MiCA aspects, the regulation in the EU, all of these things. It's not coincidental that these are happening at exactly the same time. So there's all these aspects here, and all the development processes of CBDC development and all these things. But back to that point, central bank digital currency, we look at the retail aspects. There's also the wholesale aspects. So this is around like the institution level, lending, funds, etc., reserve currencies. And then you've got retail aspects, which is heavily orientated, of course, around the usage towards us as the general public. And there's loads of massive branch offs as to why these are good and bad ideas. And still we're in these kind of conversational levels of interest and development stages. So there's a lot to go by. But yes, some will argue that you've got the scalability aspects, being able to handle the high volumes of transactions. So if we're all moving to these new systems, whether it's through the RTGS, SWIFT systems, or complete new financial systems, this is where that transaction per second element of blockchains becomes significant, because you need to handle essentially the giant increase in processing. Because at the moment, you and I could send money to each other for sure, and it could show up in our account immediately. But actually, the process of that can take days for it to actually have that finality aspect. And what we mean by that is it being logged, processed, validated, the confirmation of the transaction occurring, which tended to go through the likes of Swift and Chaps or BACS, whatever you want to call it, through the basis of the financial systems that your countries out there use. And this will be essentially replaced with blockchain, the utilization of AI and the processing chips that we have now for power and energy to accommodate this within minutes or milliseconds. And what can that do? It can ultimately increase the speed at which the economy can grow, the speed at which things can be finality paid. And what I mean by that is if you're a company and you owe money to someone and you've paid that, but it takes 5 to 7 days to process that, you lose 5 to 7 days of potential opportunity to clear that credit or debit aspect. And then ultimately you are slowing down the process of being able to produce or potentially buy more product or produce or materials, whatever it might be. So reducing that number significantly can increase the ability for everything to move faster, whether that's transportation logistically, from that demonstrative purpose, or as I just said a minute ago, the ability to buy and sell things quicker and faster. And when we can do that at an institutional and a business level more efficiently, the world changes significantly as well. And as I said, the use of smart contracts, if it was in a situation where a contract in general and then a digitalized version of that contract was applicable to a reasoning as to why something was delayed or not, if we're putting things in that digital format and speeding that process up as well, it all links heavily together too. So there's the argument here that I mentioned earlier. Could CBDCs improve the global economy? Well, we kind of mentioned about that aspect for sure. There's a lot of policy framework to run through, but there's the two areas of interest to me, and particularly as to could it help improve inflation or indeed interest rates as well. So first of all, inflation wise, it's kind of partially unlikely to suggest that it would eliminate inflation. I don't think you can remove this because actually it's quite a big part of the elasticity perspectives of economics. That is literally the only wording and area that I remember from university. I don't know why, but in marketing, the degree that I did, we did have to do an economics sessions or a unit, and I picked up certain things of that. And I think it was in the first year purely because of the fact that if you found it boring or didn't find it interesting or the need for it, you can then remove that out of your synopsis of lessons stuff. But I took some of it on board, and actually I always wish I could go back to myself 10 years ago to change my philosophy on certain things, to go, actually in 10 years time you might be interested in crypto or investments and things in general, and you might want to know a bit more about this. But for those that know about elasticities and economic factors, etc., this probably makes a bit more sense to you. But yes, it is absolutely, the CBDCs are an implementation of monetary policy that, of today and tomorrow. And what I mean by tomorrow, I don't mean physically tomorrow, I mean the future. And ultimately, can help certainly kind of gather that real-time data. We mentioned about the implication of AI in this as well, but can also potentially help from the inflation perspective to make perhaps better decisions, better reporting facilitation. So at the moment, a lot is, I wouldn't say it's guesswork. I don't think the politicians are that bad. I know, we kind of question them somehow or sometimes, but the reporting infrastructure, the trend setting is really important, the forecasting aspect, to determine whether something should increase or decrease. We're kind of going on sometimes old data or old trend historic data, and it shouldn't be that way. It should be totally real time. And if we get the ducks in line, as it were, and we use AI and we use CBDCs for that real time finality transaction, processing, validating, etc., we should have a clear mindset moving forward as to understanding the exact trends that will occur, not just from history, but real-time data, and setting those real-time trends to understand, are we putting this too high? Are we putting these interest rates or these inflation rates too high or too low? Are we creating more problems than we should be? And on reversal of that as well, are we doing enough? Not enough. So there's some really big interesting points there to relate to that in that aspect as well. And of course, from the kind of interest rate perspective in general too, just jumping back, I don't think on this particular article we've got too much detail about the issuance towards like interest rates and things, but I can kind of tell you off the top of my head because I've studied this for a couple of years now. But yeah, essentially that flexibility aspect, the implementation of existing interest rate policies can definitely be evolved here. So for example, central banks could potentially introduce things like negative interest rates on CBDC holdings, which ultimately could then encourage like the spending and investment aspects, whether you're an individual, whether you're a business, and you might be inclined or less inclined to hold CBDCs if they incur a cost to do that. So CBDCs can essentially improve the mechanism or the transmission or the transaction aspect of monetary policy, but then also could potentially have interest rate aspect cut with immediate effect to an extent on existing bank lending processes and deposit rates as well. So it could allow central banks to essentially directly influence the rates of digital currency holdings, but potentially could also make interest rate adjustments more effective. So the aspect of that is quite complex. I will probably do an individual video on that, but the ultimate thing here is that achieving those kind of maintained price stabilities, which ultimately comes down to the inflationary perspective, controlling the inflation by managing the interest rates. Yes, it is difficult to kind of get your head around that, or indeed for that process to take part, but you kind of rely on the requirement of like a coordinated approach, for a better word, of different multiple kind of policy frameworks, whatever you want to call it, across the world, across your international bodies, and regulatory aspects as well. It can definitely help to address some of those kind of challenges. So we talk about price stability, you're reflecting on the point which we'll come to on stablecoins in a minute, is that aspect of volatility of a price. So you look at a dollar, if you look at intricate detail, or a pound on a market scale, you sometimes get the fluctuation of like 0.1% or some silly little numbers that don't quite allow it. So if you looked at a pound as it is, £1, it can fluctuate just under that, and it can also fluctuate just slightly over that as well. And it's obviously backed by gold and other things commodity wise that keep it very stable, liquidity and all these things. And CBDCs can help with that volatility change as well, because actually, if you're dealing with huge amounts of numbers, those small intricate percentage details might not be something that we really worry about as a general public, because we know a pound is a pound, we send it, irrespective of the debt that's behind it. If I send you a pound, you get a pound. And sometimes the banks take a hit on that. A lot of people don't really know that. And it kind of fluctuates in that. Sometimes they just make the money back, whether it's through extra taxes or some other service products, and they just add that into the margins or whatever to kind of flex that a bit. But it's very minimal to us. But in the grand schemes of wholesale institutional level, that small percentage number could be quite significant. For sure. And you can kind of relate that point to maybe the aspiration of when you're looking at like Bitcoin, you may not be able to afford one Bitcoin, but you can afford Satoshis of it. But of course, that volatility in Bitcoin is absolutely huge, especially on a micro level, a minute or a 5-minute trading schedule. You can see extreme amounts of volatility there. Companies wouldn't want to use that as a currency or a formality of, payment finality. They would want to use something stable. So when we see these elements here in this particular article about what is the point of the ability of CBDCs, there's so many different positives here, and particularly one of those is aspects of credit liquidity risks, the actual expansion of this, the ability to be inclusive to it, the accessibility, the speed, the processing, all the things that you can think of. And as well, which you may or may not have seen recently, is certainly more and more companies and regions are moving towards their own systems to remove themselves from the dollar. You may have heard about the de-dollarization format or narrative for some time, and this is heavily guarded in the sense that the digital dollar doesn't always give the massive benefit to many countries around the world. It gives the power and the monetary substance of power to the US for a long time. Some countries aren't happy with that, or they want to explore their own definitive financial system. Now, there could be an argument in the coming years that the US and vice versa could have arguments about, well, if you're not doing this, we're not going to have good trade deals with you. But ultimately, you're going to lose out at the end of the day. But irrespective of that, you could argue as well that if you're paying in a CBDC structure, as long as you're getting paid, does it really matter? But that's where the political stances come in, and you're going to see a lot of battles around that for some time for sure. BRICS we've talked about a lot. If you follow our YouTube shorts, I talk about BRICS quite a lot, especially with the CBDC orientation here. But look at this. The UAE, United Arab Emirates, makes the first digital dirham transfer via Enbridge. So those that don't know Enbridge, this relates to this absolutely huge project from the BIS, of which I believe Quant and a few other well-known blockchain companies were involved with as well. It's very much the testing program of a multi-CBDC platform, cross-border payments worldwide. The UAE had basically done that first digital platform. What has that achieved? It's achieved the speed of it. It's achieved the processing ability, the efficiency of it, the reduction in the processing fees. The speed of this as well has been increased significantly, and ultimately they're going to get best money for their buck. I know we're talking about dollars here again, but the ultimate thing for them is that you remove that reserve currency, you remove the cross-border fees, the currency exchange fees, and again the big number here, look at this amount, $13.6 million worth. Can you imagine like a commission fee or a exchange fee on that using the existing monetary system? And you say to a company or a country, hey guys, we can save you like $1 million or whatever per transaction, or whatever that fee relates to or equates to, they're going to go, yes please. So there's no way that CBDCs won't be introduced. And it goes back to one of my points in the event the other day. People were talking about, can stablecoins suffice? Can CBDCs suffice? And some were arguing that we don't really need them, or we do need them. They're not going to go anywhere. And I totally disagree. I think that, of course, they're going to come, because the narrative is here. They want to push it, and they will make it work. There's no doubt about it. And we look at this stablecoin aspect really quickly as well. So, CBDCs are looking at the replacement of the existing currency. A stablecoin is basically a digital kind of format that even a company can make. A company can make now a stable coin that relates to liquidity based on their company or project. I mean, for example, you could take the example of like not Goldman Sachs. It's these kind of companies basically that can essentially create their own currency to stabilize something, hold it at its non-volatile remit to be able to pay other people or pay their customers and vice versa. Whereas in this instance, going back to that volatility of the pound or the dollar, irrespective of whether it's an exchange rate volatility or the actual volatility of the currency itself, can fluctuate enough to cost a lot of money. So you've got this aspect of being able to do that. So it just says here, stablecoin is a form of digital asset that can be used to make payments. Very simple paragraph there. It isn't like the cash you carry or the money in your bank, which is held on a central record by a bank. It is an asset that could be created, for example, by a technology company, exactly what I just mentioned a minute ago, rather than a bank. So why do we need this? Well, how does it work? Stablecoin typically goes through a few stages before someone can use it. Each stage may involve different companies. Issuing of a stablecoin. The stablecoin is issued to a broader public through other type of structures, such as ledgers or DLTs, for example, record transactions, who owns the stablecoin, who's using it, how much has been transferred. And then the value of the stablecoin issued on the ledger is linked to the stable asset that the issuer holds. This means as soon as a coin holder wants to exchange the stablecoins for, say, money in their existing bank account, they can do that easily without loss. Key definitive word there, without loss. So no volatility at all. And it is what it is. That pound is £1, definitively. And that's the missing piece of the puzzle for the stablecoin perspective. So if, for example, you owe someone money or a company owes someone money, they can put that in a holding remit in a smart contract to say you can have the money, it's transferred, it's processed, it's validated. You just need to sign with your ledger. I'm just going to use this as an example. I've got my ledger in my hand right now. If I wanted someone to send me the money, I have to sign that. And without that day, let's say it took 2 or 3 days for us to do this, because we're not using the blockchain infrastructure here. We're just doing this like you and I, and maybe I'm lazy or slow or something, and I've taken 2 or 3 days to sort this out, and you're pestering me going, can I have my payment, please? You got 5 days to do it, or you breach your contract, whatever it might be. And that's when obviously the digitalization kicks in to automate that. But the point here is that if I've got my ledger, I can probably just about see it, and I sign that, it transfers that money. But in that 2 or 3 day period, legitimately, that cost that you kind of saved towards them, let's say it was like the dollar on the mark, but in that 2 or 3 days, it might have gone up by, like, this is a pure example, just for the demonstrative purpose, it went up by 25 points, like 0.25%. So £1.25. Now I'm sitting there going, hang on a minute, why should I absorb that cost? Because they're so slow at signing the other end or receiving the money, whatever it might be, or the process in the air hasn't quite transacted that quick enough, and it's going to cost me money because my customer is not wanting to pay the extra 0.25%. And that works exactly in reversal as well. So you can actually stabilize that asset, that money, which is purely backed with the liquidity or the commodity, whatever it might be, and it just stays at that dollar. So hopefully they do it in time anyway, but if it did stay for 5 days, 20 days, 30 days, it's stable, hence the word stable coin. And ultimately it makes it a more happier way to do dealings, and a more lucrative, more efficient way. And in respect to that 2-3 days example I gave you, the ultimate situation with CBDCs and stablecoins is that everything would almost be pretty much immediate. And you don't have any of that volatility, any of that additional cost at all. So that's kind of like the application or the processing of stablecoins. So people are always like, in the event the other day, like, why do we need this? We've already got money, we've got this. But I guarantee to you 90% won't understand in the banking remit. As I said, as a user and from an economy perspective, we're slowed down by simple things like this and the cost benefit. And if we want things to be cheaper and more efficient, we can remove these aspects of finance and transfers and payments so we don't get overloaded with extra costs or arguably hidden tax or hidden debts and things, and that's where we as people then have more disposable income. Companies have more ability to buy and sell things can move quicker, we can evolve technology faster. All of these things are in a snowball effect. That's pretty much the lowdown of that. Now, some people are like, what's the difference? Stablecoin is not the same thing as CBDC. Stablecoins and CBDCs do have something in common. So they are the form of digital money in the existing systems that we have. However, stablecoins are issued by companies that aim to keep the value of stablecoins steady by trying them to something stable. CBDCs are issued by a country central bank and can be thought of like digital banknotes. They are like digital representation of the cash you already use. Central banks work to keep the value of the money they issue stable. The Bank of England is the UK's central bank. It's probably owned by, I don't know why I read that bit out, but you get the orientation here. So you've been given now an application. Hopefully, I've tried to explain it the best I can. I do recommend, whether it's this video, other channels, other people, whatever, to always do your own research and always think about this in your own way, and I always try and find like examples in my real world situations of, okay, how's the representation of a CBDC stablecoin going to affect this, or how will it apply to this, and then you can start logically thinking of like, oh, I see why we would want these or not want these in some instances. I mean, some people always bring up the point about programmability of CBDCs. I personally believe that they will introduce this. What do we mean by programmability? We mean the ability that the fact that this is purely digitalized is traceable aspects of things. There's no anomaly to it. To an extent there is from privacy and data, but what I mean by that is the tracking, tracing ability. So there's good things like removing, or hopefully potentially at least trying to remove, things like money laundering, fraudulent money activities. Can you imagine something just before it goes through and then you having to waste time on the fraud team saying some money's been taken on my account? We have this signatory perspective, digital identities, KYC and all these things to stop that completely. Unless you're a super duper hacker or anything like this, you wouldn't be able to do anything. No more fraudulent activity. Can you imagine that? So that's some good positives there. But on the other side of this is the programmability. Who manages, processes, controls, or makes the decisions as to how much data is given away with our CBDC stablecoin usage or our holdings, or indeed what could be done with our digital money? Because at the moment we can draw cash out, we can some people have cash in the mattresses or in the fridge still. I think there's always a common narrative that some people have money in their freezers. Can you believe it? But I've mentioned in previous videos, the days of those are very much at the end, because the old cash you had 10, 20 years ago, you can't even use anymore. And you had to go back to the Royal Mail or post office to convert those into the new notes. So it's fully traceable again. All those monies that were disappeared out of the economy are now making their way back because you can't use the old notes anymore. So very interesting how they did that. Very clever. I think it was as of last November when they did that. We warned everyone well in advance on this channel from 2021 onwards, I think. But anyway, back to the point elaborately about these interesting topics. But yes, the programmability aspect could potentially go down the route of, if you don't do something, your money could be blocked. And I raised a really interesting point about ESGs here. So this is the environmental sustainable governance initiatives that are going around the world right now, mainly at the moment in an institutional level, business level, because you kind of have to start up there and then it will eventually filter down to the general public. You may have seen things like ULEZ here in the UK, whereas the formality of, if you've got a high emission car, you'll pay more fees to get in and out of certain cities. That will broaden the horizon in the sense that potentially and eventually things like the eSIM cards that go into cars, relating to blockchain, AI, all these things that we talk about on the channel all the time, is that you might not do something that the council or the government doesn't agree with, and therefore they will block you from going outside a certain radius. Now, when we eventually evolve further into driverless cars, or you can't drive your car anymore because they've just stopped them in the next 30 years or whatever, we're already adopting driverless cars and things picking you up and taking you deliveries, etc. They could potentially say to you, you're not going out your 5 mile radius, or you can't spend in the shops because you're eating unhealthily, and your credit score or your social score, your health score is not good enough, your ESG emission scores aren't good enough, and therefore we can block you from doing these things. And that's ultimately where the KYC digital identity has maybe a potential negative effect when you're utilizing a new financial system. Some people will argue, oh, I'm never going to do that. I'm going to keep using cash. I'm going to keep using my debit card. I'm telling you now, whether you like it or not, that will change over time. They might give you an indication that will never change, but it will change. Here's an interesting statistic. I remember about 5-6 years ago, I was talking to an elderly couple in London, randomly on a bench. I just like talking to people, and they was like, what do you do? And I work in like crypto blockchain. Gave a bit of an explanation as to what it was, and they were like, oh, that's really interesting. I will never leave my cash, blah blah blah. But the husband said that they had recently got a debit card and started using the tap and go, and that was an evolution because a lot of people didn't want to do that. They said, nope, using cash, put my debit card PIN number in, fine. Now people just like the tap and go, and that slowly evolved. I remember the first time I saw that in London, maybe about 10 years ago. I was absolutely excited about it. I was like, what? I don't have to put my stupid PIN number in anymore or get my card out. I can just tap it and off I go. And the speed, I saved like 5, 10, maybe 20 seconds of my life, being able to get out of the shop quicker or not have to queue, which I hate queuing. I'm British. I hate queuing. Very impatient on that aspect. But the orientation behind that was that in the pandemic, so it was around 2015, there was an initiative to try and get more and more people into the tap and go ethos or tap and go payments and get more and more people digitally. And I did a great, not being egotistic here, I did a great video a couple of years ago on banks removing themselves, closing down, and people were like, oh God, what are we going to do? I can't go to the bank. I can't get my cash out. How dare you? Blah, blah, blah. It's a snowball effect, guys, and it's going to get worse over the coming years. And I showed statistics, and I showed the program of bank closures, the anticipated bank closures over the next 5 to 10 years. And the next 2 years, or even indeed last year, was a snowball effect of that beginning. And now, for me personally, living by the coast, yes, we have our city centre, which has one. I don't go in there. I haven't been in a bank for about, I don't know, 10, 15 years, probably. I've used the app. What on earth do I need to go in a bank for? But there's a generation of people that don't have that philosophy, which is absolutely fine. People are entitled to whatever they want to do or think. But ultimately, the transfer of technology, the efficiency, the closing down will force people to do it. The word force is simple word and terminology here. It will just happen, and we will have to accept it, because if you don't accept it, you can't be part of the society or have the enjoyments of being able to pay people or whatever, set up direct debits, rather than going into the bank. So all these new illustrious banking systems coming into play, more new wallets and more apps, open up the opportunity for digital currency to really thrive. And that was a big topic the other day, like the evolution of this. Banks closing down, it's becoming more digital. In the pandemic, I can't remember the exact number, but that, as I said, in about 2015, there was a goal to try and increase this number. And they had like a 10 to 15 year plan up to the 2030 goals, the Agenda 30 program, the UN documentation, the World Economic Forum's initiative to try and increase this, or at least potentially eradicate cash payments or traditional banking methods in general. In the pandemic year, all the people that said that they wouldn't go and use tap and go, they don't want a debit card, all of a sudden had to get one, because you couldn't go to the bank, because you needed to use the app. You needed to facilitate payments still, and still pay bills in those crazy times that we had. But the number increased something like 13,000% of usability in tap and go payments. Now, on the other side of the pandemic, those people haven't reverted back. I mean, they might use cash occasionally and maybe go to a bank occasionally for whatever reason. But I guarantee to you, 90+% of people haven't gone back into their old ways. They've accepted the change and the adaptation that they needed to do, and realized that this is actually simple for me. This is efficient for me. It's easier for me. And that's it. That's all they need to do. They need to give you a demonstration of something. Sometimes things are forced or needed to be done for you to go and change your mind. And it's going to be exactly the same for facial recognition, biometric identity checking, digital identities, decentralized identities, KYC, Some people will have arguments with them, but I guarantee to you in these next 5-6 years, it's imperative till 2030, they will have everything that they said they would implemented. You can argue, you can protest all you want, nothing will stop what is to come. And we try and sometimes slyly tell you about these things on the channel. It's inevitable. So again, back to that point earlier about as an investor, how can you take advantage of the processes or the companies or the technologies behind all these evolutions of change? And that's where we kind of swing back to a CBDC, stablecoins, whether you think they're good or bad, the reasonings behind what the advantages and disadvantages, they're coming whether you like it or not. And if you don't think that, go and see what's going on over in the western region of the eastern region of the world, and slowly progressing forwards. I will roll back. I worked in artificial intelligence, deep learning, machine learning for many years, and definitively, even in my head, thought, is this a good idea? Do we really want to go down these routes of artificial intelligence? Cameras picking up on your eye colors, what you're wearing, where you've been, your thermal recognition. Are you going to be a risk later on the day because your thermal record's rising, therefore you have a higher percentage of doing something aggressive? All of these things have been around for years, and it was many people always said, I will never do biometric payments, I will never do biometric checks, I will never allow facial recognition. Now most restaurants check your thermostat reading, or they did at least straight after the pandemic, and also things like facial recognition to log yourself in. People were against that, but now they quite like it, because in some instances you can walk up to a counter, you can walk up into a restaurant, it already knows who you are, and they go, oh, welcome Simon, come and sit down, we've got your table booked. That was booked through artificial intelligence in the near future for sure, because you're like, I'm hungry, I want a table booking at this and this. It's done for you, it's already paid for, because your digital identity's kicked in, your KYC, smart contracts in the background, blockchain's process, validated it. The whole list goes on. I don't need to get my payment card out anymore. I just turn up and I sit there and I leave the restaurant. Everything that's been calculated by the tills and stuff has already been paid for, already done, unless there's an issue because my bank account doesn't have any money in it or something, who knows. But the finality of that is key. And I've made that acceptance of a smart contract to make that initiation of a transaction exactly the same application everywhere else. And it loops back around to that point of stablecoins. Again, the stablecoin aspect sitting in between the transaction of accompanying yourself as an individual, or company to company, person to person. So we don't have that volatility. There's no extra cost. We've got blockchain technology that boasts significant transaction per second, in some cases feeless. We're going abroad. The cost of buying and selling things abroad, or buying things when you're on holiday and stuff, it has got a lot better, let's be honest, over the last 5-10 years of paying. I just pay my debit card as some minimal fees. I don't really care. I don't even notice them. But you could eradicate those completely as well. And the formality of being able to go around the world, facial recognition, biometrics, it will just become, when you get told, or you go and experience that for yourselves, which many of you probably have out there, of artificial intelligence terminals, which I've seen firsthand. I've seen how they've been built, because I work for the companies that build most of them and see them in most of the airports nationally. People go, oh my God, I don't have to queue anymore. I don't have to sit here for half an hour. I just want to go home, or I want to get on to my holiday. And that 20-minute queuing has turned into 5 seconds of walking through. People will love it. And that conversation of, I will never accept this or that, goes out the window, because there's always a saying that David Icke came up with, is have the solution, create the problem, or make the problem really apparent, put in the solution, and then you will have acceptance of it. And that's just the mindset traditionally of humanity. The super rich and stuff know exactly what's going on. Those that are in the know, and whether worked in companies or industries like myself, know these things that are coming. So I'm more adaptive in my mind to be open-minded about everything, and to go, you may argue all you want, but it's going to happen. How are we going to take advantage of it, rather than just sitting in the system all the time? That's just how it goes. But as I said, stablecoins, central bank digital currency, exactly the same principle, that these things will and are coming in to improve systems, to improve the way the economy grows. And again, it will start at that wholesale level first of all. The general public won't see this for a few more years yet, probably. They will have trials of it, which are already starting for sure with some people. The digital wallet here in the UK that we covered, You obviously had that 6 to 7 month process last year of the government and Bank of England going out to companies saying, we need a digital wallet created for our digital pound, go and make the thing. I can't remember the name of Kinnan Carter, I think it was, who ironically got purchased out by some crazy company. I could do a video on that because that's its story in itself, which is very interesting if you connect. But yes, it's that principle of faster payments ability. Smartphones, debit cards will be a thing of the past in the near future because we will just walk through things, we will walk past sensors, we will just pay for things. Already they've got us used to it, guys. Smartwatches, tap and go with your phone. It's a stepping stone approach to the point where, as I said, turn up at a bar, have a drink, they charge you based on your biometric, artificial intelligence, facial recognition to come in. That is Simon coming in the bar. He's just ordered a load of stuff. He's just going to walk out now. He's already paid for it. I don't need to get any card payments out or anything like this. Unless I don't have money in my account and they stop me at the door and go, hang on a minute, go and wash the dishes to pay off your drinks. I don't think they do that anymore, but you get my point. But yes, as I mentioned earlier, CBDC stablecoins, there's no doubt, and they're inevitable that they're coming. And we will yet to remain to be seen the exact accuracy of whether they are beneficial or not. I personally think they benefit banks significantly. I think they benefit governments, taxing significantly. Do they benefit the human general public population? Remains to be seen. And I totally want your comments and thoughts below. There is no right and wrong on that point. And it was made a point again at the event the other day. And I mentioned this in a video last year. I didn't know about this till about 2 weeks before it was finishing. There was an opportunity, particularly here in the UK, to fill out a survey of concern, arguments, whatever you had about a central bank digital currency or digital pound coming. We have a population of millions of people here in the UK, not as big as many of the countries out there. But to put this in context, let's say 3 million people, 2 million people, only 50,000 people filled out this survey. So that is your partial representation of this country, of their feelings towards CBDCs. And a lot of the feedback was about programmability. Is this even worth our time? How much are we spending on this? Innovation or research? All these negative questions were coming out and we haven't really got answers to them yet. But my point about that is the education and knowledge aspect. And I've always said to people, I said to someone at the event the other day, they don't want you to be educated or know about this. If this was something hugely significant that they think, oh, we really want the general public's knowledge and experience and thoughts about, they would have made a giant national campaign about it. Of course, we'd have to pay for it through taxes, but I guarantee to you in a couple of years' time, CBDCs and everything, when they get officially launched in this country, people will sit back in their chair and go, I don't want this. What on earth is that? I didn't know this was coming. How dare you? I haven't voted for this. And they'll go, well, we gave you the opportunity. There was a survey. Did you not get the link? Well, obviously not, because there was no leaflets. There's no posters. They'll have posters about everything else that they make money off, pharmaceuticals, etc. But you won't see anything about, the significance of financial development and change in our society and our world. It's quite staggering. It's very disappointing. But, how many schools, colleges, universities teach you about how to make money? They don't, unless you're in an investment class. They tell you how to work and pay taxes, essentially. How do you get on in the working world? So you do have to have a elaborate mindset to teach yourself these elements. And that's why this channel's here, to talk about CBDC stablecoins. Even if you thought, what on earth is this video about? At least you know, or didn't know if you didn't know before, there's a word and terminology of CBDC, central bank digital currencies, and you know there's a stablecoin. If you don't still know what they are, you've at least got those words in your head to go and find out for yourself. That's what I mean. Just simple things like that. If you go on the street, or the government put a huge poster on Piccadilly Circus or something, said, what is a central bank digital currency? Curious? Do you have questions about it? This is coming in the near future. Represent your survey or your questions and your answers now. None of that. So that tells you everything you need to know about what's to come and what they're trying to do with it. Again, is it a good idea, a bad idea? That's why I go to events like Digital Pound Foundation, to learn significant insight on this, what's being done about policies. Some policies I think are a waste of time, or the thought and thinking of them, because some countries are way ahead and we're falling behind. But are we doing it in a good way, in the sense that actually we're thinking long and hard about this? How is the digital pound going to work if some others don't work, and learning from some of those mistakes? So you could argue both sides of the coin there, or the CBDC coin that's to come. But yeah, I think it's an elaborative conversation, and certainly one that I always want to try and pick up on this channel. But I just thought I'd give you a bit of an update around the Digital Pound Foundation event that I was at during the week, the kind of rough topics and thought process around there. If anyone has interest in this, I'll see if I can get hold of the copies of this, but it's really cool. Digital Currency Glossary, if you can read that or see that. It was really cool. It's just massive elements of terminologies of everything digital cryptocurrency wise, CBDCs, what does encryption mean? What's decentralized technology? What does big tech mean? Synthetic CBDCs, utility tokens. It's really cool. And this is the kind of stuff that should be in banks. You go and pick them up, or the ones that are not closed down yet. This should be in libraries. It should be everywhere, this stuff. Leave it on tube station seats. Well, put it in a newspaper article. Not just for the attendee. This isn't an attack on Digital Pound Foundation, right? By the way, this is just generalized gloss. Maybe I should do it. Maybe we as a community should be driving the glossary of finance moving forwards, because I don't think we're going to get anywhere else. It is frustrating, but you're here, you're watching, you're listening. You may have not got this far in the video. You might have got bored after 2 minutes. But as I said at the very beginning, at least if you know those two elements of stablecoin CBDCs, I've done my job here. Whether you listen for 1 minute or 50 odd minutes that we've done the video for, it's something to think about, something to learn, something to know as much as you can about, because it is coming. Keep an eye on the channel, guys, for the discussion topics further on those points. About the book, quite simply, leave a comment below about your thoughts on CBDC stablecoins. I'm going to pick someone at random, and I'll definitely message you through the comments, and we'll work out at some point how to get details of how I can send you the book. It's really fascinating. I'm really enjoying it. I love thought-provoking things, or these kind of flippant mindsets of information and thought processes. I think you guys will enjoy it as well. So let me know. In fact, I might be generous. I've got 2 spare ones. I might do it for 2 people. So chuck your comments in there, irrespective of the book or not, whether you want it or not, or trying to get it. Do leave your comments, because I think this topic needs to be talked about. It needs to be discussed significantly. And any feedback that you provide in here, I will take that to the next Digital Pound Foundation event and say, my audience is asking these questions. We need to know. It's all very well you guys in blockchain and governments and banks talking about this, but it's the people that are going to be using this. You either use it as your feedback to innovate further, or you start listening to the fact that not enough is being done for education. And again, it's not a tag on Digital Pound. They're doing what they can. But I think it goes beyond that. It's the responsibility of our governments, our parliamentary aspects, banking systems to educate us. Not just membership programs or foundation facilitations like Digital Pound Foundation. They do some legwork. They do a great job. But we need to do more. And hopefully this channel helps with that. Thanks for watching, guys. Hopefully I haven't bored you to death, but I find this a fascinating topic. We'll see you in the next Digital Pound Foundation recap video when I next go to the event, which is in a couple of months. Thank you. Goodbye.